We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is James Anderson from SD Bullion. How are you today, James?
Good, Tom. Thanks for having me back.
Excellent to have you. And you're just returning from a long trip here, so it'll be good to kind of get your perspective on what you've seen through the world and everything. So I want to start by getting your perspective on, looking at gold demand since, let's say, the beginning of 2020. Are we starting to see a surge in demand around the world again? And could this be due to these inflationary fears that consumers are reacting to?
Yeah, in terms of private investment interest and high net worth, interest, I think that is trending. It's trending higher and getting larger. If you remember back to 2020, when there was that issue with London, essentially London was shut down and there was a huge arbitrage going on in the COMEX. You had a situation that sucked a lot of gold and silver into the COMEX and into the North American markets. And all of a sudden, the COMEX suddenly became almost like a physical exchange. There was so much delivery notices happening. Not to say some of that stuff got pulled out completely of the system, but for the most part, it's only been in silver really where we've seen it. I still think in the years to come, when you actually start worrying about the underlying currency, the value of currencies and fiat currencies and the questionable nature of the situation that we put ourselves in fundamentally regarding debt and unfunded liabilities and what needs to be paid typically by Western societies and Western cultures, all the promises they made that they never saved for. These are all questions that the bond market, the currency market, even the stock market are going to have to reckon with. And in those reckonings, I think commodities, especially precious commodities like gold and silver, should perform extremely well. So the short answer is yes, investment demand is coming and it's going to keep growing.
So let's take Germany, for example. What are you seeing right now for gold demand out of Germany?
So I think there was a chart that went around recently on Bloomberg. I think it's stated there was 110 tons of demand recently in Germany. And that's as large as it was in just after the global financial crisis in 2009. And that's a good size. 110 tons, but to put it into perspective, 110 tons is, in India, when it's rolling, when India is really demanding a lot of gold, you know how much they take? It's like 1,000 tons a year. There's a good portion of it that's smuggled, maybe a fifth. I just saw an estimation of their imports come via smuggling because they have a 7.5% duty and tax. But Germans in Europe per capita, they buy the most bullion. They buy the most gold. They buy the most silver. And the reason for that is because 100 years ago, they had a horrible hyperinflation. And their families have passed down that experience, and they're afraid of currencies going wrong, and that totally gives them incentive to look at the long term and buy bullion for the long term store of value that it offers. And so, yeah, there's demand that's increasing in Germany. There's demand that's increasing in the East too. It's just this weird muddling phase still because we're in the middle of this pandemic that still keeps going, and it seemingly is never ending.
So how does monetary velocity play into the way that inflation works, James? We've seen all the measures of currency supply explode over the last 18 months, but it seems the majority of this supply isn't really making it into the economy. So how does the rate at which the currency moves through the economy affect how inflation is perceived?
I think it used to matter a lot more. I think it used to matter a lot more in the 1970s versus today. The way that the financial market works now versus then is much more complex. If you look at, for instance, the M0, the fiat US dollar monetary base, just under 3 trillion is in actual physical notes that circulate around in the world. And, roughly 3 to 4 trillion is sitting with banks, and they're just sitting there and using it to basically arbitrage and to make some profit they can and to stay solvent on their books and make it look as if everything's okay and make everyone believe that the financial system is sound. But, underneath it all, I think it's not sound at all. We basically covered the pig in 2008 and said time out. And we've been waiting ever since to begin the next phase of the bankruptcy cycle. But my hunch is that's got to be coming. You can't have a situation like we've had with this pandemic and all the lockdowns and all the consolidation of business and not have bankruptcies and write-offs. And we just haven't gotten to that phase yet, it seems. The bankruptcy phase and the solvency phase is coming. And it's not just going to be on a private business scale. It's going to be on a sovereign basis. And that'll be new for most people who, will be new for me. I've never lived through anything that profound, but that is coming likely this decade.
So as we think about, let's say, inflation really rising right now, how does the mistrust in the administration play into this as another layer on top of that?
Yeah, look, ultimately, there's a few things. It's like a psychological thing. I don't think people understand that inflation is so much of a psychological phenomenon as it is also, currency velocity turning over, et cetera, et cetera. But there's a lot of free currency, let's say, that has gone into the hands of lower and middle class people this year. And, whether or not they've used it to pay off debts or to go out and buy, random goods like, there's a lot of people who went out and bought, silly trinkets and baubles. Retail's doing really well. Grocery stores are doing really well, et cetera, et cetera. But there is a large amount of that currency that's turning over in the market, and that is helping to spur inflation along. And it's also a psychological thing. When you're in a business and you start seeing inflation spur and you see costs rising, you have to make changes. You have to, a lot of what you're seeing now is further examples of shrinkflation, where you see, brand new formula, and it's the same product. It just has, 80% of what it once had, and the price never changed. And they don't take that into account, the CPI or the changing propaganda index that they use. So, if you actually believe the government and the inflation numbers they say, then I'll pray for you. But if you actually have common sense and do, any type of critical thinking, that they're lying by multiples of factors. The inflation for the last few decades has been high single digits to low double digits compounding. And that's just not shown up yet in the commodities and precious metal space, but ultimately it will, because of the reckoning we got coming.
So considering the news that Palantir had bought $50 million worth of gold and that their clients can now pay for their services in gold, do you see this more as a warning of a possible black swan or bigger geopolitical event that they see coming, considering their role in intelligence?
Yeah, I mean, think about the clients they have. It's the CIA, it's various military branches. It's a lot of folks that worry about black swan or risks that are kind of outside of most people's thinking possibilities. And so having bullion on their balance sheet or having cryptocurrency like BTC on their balance sheet is probably a way or a hedge, a strategy in case there are any type of curveballs in terms of the payment system. Like if we have for instance, a breakdown in the internet and the way the internet operates, or some type of breakdown in the system for payments, bank wire transfers, et cetera. How are you going to pay for services and goods, et cetera, and keep your business afloat? Having a hedge in some other alternative currency payment and money payment options is not a bad idea if you want to thrive in a situation like that. And a situation like that could last for quarters. This is not just weeks. This could be a real problem that lasts for a long time, and it could be a real scary event. So I think they're planning for contingency and worrying about the grid and how not really stable it truly is underneath.
So, James, you and I discussed before we hit record here about, kind of having a bigger perspective rather than just focusing on these news stories of the day to day around where you are. So you recently returned from Israel. So I want to get some of your perspective of how you see things evolving around the world as well. Sure.
So it was actually Turkey I passed through. I was in Eastern Europe for a few weeks, visiting family out there. And then on the way back, I had a one-day layover in Turkey, and it was a good opportunity to see Istanbul. It's the biggest city in Europe. Almost 16 million people live in that city. And I got the privilege of riding around with a friend from back home who's been living there for a few years now. And so I don't know if you've ever traveled quickly through a place, but it always helps to cut through the red tape and the tourist nonsense by just going to someone who lives there, and they'll show you the skinny real quick. And so we got on couple bikes and just rode around town. And, I'm not like Mr. Bike Rider City guy, but he is. So he led the way, and we went around and looked at various mosques. And I tried to go to the Grand Bazaar, but it was closed because basically their 4th of July was the next day. And so that Sunday they celebrated by not having the Grand Bazaar open. But I came in there with a fistful of cash. I was ready to buy some high grade gold jewelry, and I was going to have some fun with that, but it didn't get the chance to. So it just gives me another reason to go back. But that city is ancient. That city has been there for thousands and thousands of years, goes back beyond the Byzantine Empire's peak. And, one of the mosques we visited was like 1,500 years old. And just in the last year, their president there, who's more or less a nationalist, decided to create it and convert it back to the Grand Mosque, to to make it back into what it once was for a minute. And originally it was a Byzantine Catholic church, and so when you go in there, it's grand in size and scale. It's 6 stories high. It looked like, to the top of the dome. And what my buddy was telling me is they built it in only 6 years, which is absolutely amazing. 6 years, and the size of this thing was huge, Tom, massive. So it just goes to show you the amount of wisdom and the amount of intelligence that have passed through in various places in the world, and the fact that these folks buy gold jewelry, high grade gold jewelry in large size. I mean, Turkey buys. I would fathom to guess that versus Germany, they probably buy a lot more gold per capita. I mean, but people are always confused because they're not part of the EU, so they don't say it. They're the biggest buyer of gold in Europe, but they are on the European continent, right next to the Asian continent. So in terms of per capita size and how much gold and silver they buy, it's a lot. And I was looking forward to seeing those high grade gold jewelry shops, but I didn't get the chance to. But the whole point of it is look, their currency used to almost be parity with the United States in 2008. In early 2008, when the last commodity bull was happening, I looked, their currency, I think, was at 114 to the US dollar. And now it's at 835. Okay. That's 12 years of massive devaluation. And I could tell just by the people on the streets how difficult it must be for them just to keep their head above water, to keep a salary that keeps up with inflation. I mean, that is a lot of times the topic of the day, is just how painful and difficult it is just to keep up with prices rising. I met a Syrian refugee. We had a quick 15-minute tea with a guy who's been living there for a few years. And, he's telling me about his terrible job. And this guy's bright. He was like a handsome, bright young kid. He's telling me about this terrible job he's got. He has to work 12-hour shifts with no breaks, gets treated like dog ass, basically. And, people don't have many rights there, and they don't make that much. And so the guy's basically spinning his wheels, but he can't go home. Syria's pretty much destroyed. So these are the types of things that you see as you do traveling, and you think through, A, how lucky I am, and B, how difficult it really could be if things go wrong. And so you have to take this stuff into consideration, because, it's not saying this is going to happen in the United States, but, possibly could. It is in the realm of possibilities, because this stuff happens all the time, all around the world.
Absolutely, James. So as you're trying to give our listeners some, let's say, some of that long-term historical perspective, can you give us some more perspective, let's say, for those that have been disappointed by the price action of the metal since the beginning of the year, and help highlight why it's so important to have patience at this time?
First and foremost, when you're buying physical bullion, it's a store of value that you're going to keep for the long term. So first and foremost, it's to preserve purchasing power. And secondly, there are wild times. There's going to be a little bit of noise for a second. There are wild times in commodity bull markets or in currency crises where gold and silver run up an exponential wall. And I think we're leading to that. And in those times, you can make massive wealth gains at the same time as preserving purchasing power. But those are few and far between. They don't happen all that often. We had the one in obviously late 70s and early 80. There was something similar in 1934 in the United States history. There's also something that happened after the U.S. Civil War with the greenback. I mean, gold went from $20 to $180 in the boiler room that was happening in New York. And they claimed it was some conspiracy, but the truth is things can get out of hand to the upside, as well as, manipulated and suppressed to the downside for long durations. So the point of this is you have to have a long-term perspective. When you're buying bullion, you need to have a perspective that's 2 to 5 years minimum, and decades more likely, because you're running through a cycle that you cannot predict in terms of timing, but you can look at the math and know that it's not going to work out. And just the question is, what are the probabilities of how it's not going to work out, and how can you plan contingency wise to take advantage of it? And when you look at the grand scope of the fiat currency experience that we've been running through since 1971, basically from 1968 to 2016, there's been studies that prove that having a bedrock position in gold bullion of 20 to 25% versus the S&P 500 and bonds is a prudent play in terms of a risk reward scenario. And there will be brief times in terms of silver and even platinum where the performance of those precious metals can do very well. And if you look on a long-term scale, those are the two that have probably the most potential to the upside in the coming decades. So for me, it's having a longer term perspective, and also be willing to know that, once this starts to happen, you need to reallocate. You need to start looking for other asset classes, because I will always have a bullion position, but I will not always have an aggressive outsized bullion position like I currently do.
So James, has the disconnect between the spot price for metals and the actual physical price per ounce come back to more normal levels, or have the premiums stayed elevated? And is this telling of the market in some way?
The premiums are still somewhat elevated, especially compared to the late 2010s, 2000 teens, where, 2016, 17, 18, where the bullion market was essentially forgotten, as the stock market started to really perform in the NASDAQ and the crypto market started really doing well. The premiums I was looking at earlier today are still pretty wide. I mean, they're not as slim as they once were back in those years that I just mentioned. But I don't think they're going back to those years that we just mentioned, because we've entered a new phase in this bullion bull market. I believe now we're on the cusp of getting media attention, and not phony, fake media attention, but actual media attention that drives investors into the precious metals. We did see that in early 2020 and during the COVID crisis, and we saw it as well in early 2021 with the silver squeeze movement and all the free PR that all the mainstream financial press was giving to the retail precious metals industry. So that will come again, and when it starts to come again and regularly, you're in the media phase of a typical bubble scenario, and ultimately this will, I believe, lead into a situation where bullion gets so highly priced and valued that it becomes a bubble itself. And that was essentially what occurred in 1980. If you argue in the sense that all the gold that the U.S. claims to own covered the entire monetary base for almost 2 years. We could have gone back on a full-fledged gold standard had we so chosen, but there were other reasons that we didn't, that were more geopolitical in nature. But I do think that we're going to at least a 40% coverage ratio, and that, at this moment, requires $9,000 gold to get to that level. And I have no idea how much more M0 they're going to create in the next few years. And if you look at the M1, 2, 3 supplies, I mean, they're running up walls. So my hunch is history is going to rhyme. And the only question is, exactly how and what are the steps that we're going to go through to get there. But I do believe that what we saw in 1934 and after the Civil War in U.S. history, and also in 1978, 79, 1980, is going to be something similar in the 2020s, even into 2030, possibly.
So as we spoke about distrust of governments earlier, what are your views on storing some of your bullion offshore? Would there even be a point of a government trying to repatriate gold from its citizens, considering the astronomical debt load of most countries around the world?
Yeah, I don't buy into the idea that a country the size and scale of the United States is going to go around busting down doors trying to get people's bullion. I think what they may end up doing is some type of onerous law in terms of tracking when you sell it, or what the capital gains tax could be, because they're going to say you caused the currency crisis by owning bullion or something nonsense like that. I mean, they'll try and turn it around like narcissist victims always try and do. So I could see them pulling that kind of nonsense. But the bottom line is precious metals physically are very, very difficult to track and trace. And yes, moving them offshore is not a bad idea in a certain swath. I mean, if you have 6 to 7 figures in a precious metal physical bullion allocation, having something in safer jurisdictions, for instance, like Singapore or Switzerland or, what have you offshore, is not a bad idea. It's just the key is choosing the right logistics operators, people that have been in the game for a long time, that are trustworthy, that are professionals and do the job really well. That takes some understanding of the industry and some due diligence to do that, because I look around and there's some of these places that people use that I wouldn't send my enemy there. But then there's some that are extremely trustworthy and I'd send my sibling to, and I do. There's various vaults that myself and my siblings use, and I have no qualms because I know the guys who run the thing, and I personally know them as in terms of business, and they've always delivered on their word. They've always been solid, sound individuals. So it's a game of trust. That's always what it's always been, and professionalism and people knowing how to do it really well.
So if there's some of our listeners that are looking for some of those for a vault situation like that, James, can you give them some tips on what they need to be looking for to be able to establish that trust like that? Sure.
So depending on the size of the individual, they can just go directly to some of these companies. And I would suggest a lot of times that's the smartest play, instead of having a middleman bullion dealer, because the middleman bullion dealer will often be making a profit out of your holdings, or squeeze you into some situation when you go to sell. It'll be difficult to sell to anyone else but them at some price, et cetera. So there's a lot of tricks they can pull. My suggestion is, if you're large enough, you just go directly to a Brinks or a Loomis or a Malka Amit. And you need to check around, like, to pay for segregated gold bullion. You shouldn't pay more than 30 basis points, 40 tops, if you know what you're doing. And that's segregated, fully allocated to you and your title direct. And in silver, 50 basis points tops, 40 basis points is probably more aggressive and more competitive. You shouldn't pay more than the management fees of that silly unsecured ETF SLV charges. You can do that. And so whether it's in Singapore and Switzerland's usually overpriced, but there's a lot of options internationally that people can look into. And it's not, and it's done with companies that have been around for hundreds of years, right? Not just fly by night. Hey, I'm the new guy and this is the precious metal bullion bull market, so here's my storage facility. No. It's a third-party facility, and they don't actually trade anything. They're just storing it with guns and doing it securely.
Mm-hmm. So, James, if we get a major deleveraging event, do you see the price for bullion increasing the disconnect from the spot price?
That potential does exist because we already saw it recently. In 2020, we saw it. In 2021, we saw it. And if you have a true, you have to think in terms of the size of the notional amount of currency that's out there chasing goods and services. And if it's even a small percentage of that, like 5% of that gets really scared and wants to go into some of the safest havens there are, if they start chasing into physical bullion, forget about it. You're not going to be able to find it. And what you do find is going to be at a premium so high that it'll be scary to buy because you're afraid that, maybe the situation isn't so bad and the spot price will go back and revert, or the premiums will go back and revert. And here I am having bought it at twice the spot price. But that potential does exist. And it is something that we can see at a situation where gold's spot claims $3,000, but you got to buy $5,000 or $6,000 to get physical bullion in a secure vault, say in Singapore or in Switzerland. That potential totally exists. Mm-hmm. You know about Exeter's pyramid, John Exeter, he made this upside down pyramid, and you look at the numbers, how much is involved in the derivative market, which is perhaps the most risky and opaque of all the way down to the physical fiat currency cash notes that swing around the world. I mean, all of that, these different levels of liquidity and risk associated, every single one of them are questionable, I think, with the reckoning that's coming. And so what you end up going down to is ultimately the foundation of everything financial. It's been precious metals, physical bullion for thousands of years.
So, James, you recently also made a video kind of looking at where gold and silver prices need to go in all kinds of different currencies around the world, the top 20 currencies around the world, to get back to their all-time high. So give us kind of a perspective on what you're looking forward to here as we're entering September and the last part of the year kind of comes into play here.
So I still feel, and it's been for a few months still, and it's been tough to feel this way because especially with the few weeks ago when they came in and raided the gold market on Sunday evening and crashed it down so quickly on a waterfall decline, this derivative overdriven decline. Sometimes it's hard to believe that, you could turn around and by the end of this year, you could have $2,200, $2,300 gold, but I still feel that way. And I still feel like silver should be running into 30s, maybe even 40 by the end of the year, given all the currency creation and what's happening. Unless there's some type of deleveraging event that occurs from here to there, I don't see why you wouldn't have a rally in both these precious metals. If you look at silver, for instance, on the chart, it's been running for over a year now, sideways, consolidating, running between 22 and 30. And if you just look at that, I mean, they're building this huge base. And think about, imagine that chart expanded out 5 years from now. It could be a massive base where it just starts climbing a huge wall. And that's exactly what it looks like. And that's the potential that's coming, I think, in a few years. So my hunch is it's going to be a decent fall for precious metals, barring any type of crazy deflationary collapse. And I do expect them to have a good run this fall. Right now, I think they're poised for a run. So my expectation too is when we're looking at those 20 different major currencies around the world, I mean, Japan is only 8% off from its all-time high. And the yen, I still don't understand why the yen has traded the way it has in the 80s and 90s. It's one of the strangest currencies. I think it's been used for a lot of shenanigans, let's say, in terms of market rigging, et cetera, over the decades. I think Japan and the Western powers have done some real good tricks along the way. But that's the one currency that always trips me when I look at it in the gold price on a long-term scale. It's like literally a U shape. It's still not even like the 1980 high and the recent high are like a huge U cup, and there's no gyration between. And then you look at the other currencies. I think the largest one that has to return is, I think, 35%. It's going to slip my mind which one it was. Maybe it was Canada. But, if you look at Trudeau and the way that guy talks, I mean, you'll be back there probably within 12 months. So, I mean, that guy is something else. I wonder if he'll win the election or not, but probably not with the way he talks. But, we're not that far away for to have a situation where on the regular, every month, every quarter, every currency is blasting into record highs again. We just had that in 2020, and my hunch is all this decade it's going to be similar. We're going to be climbing this wall of worry, and then ultimately shooting into some euphoric up a wall night, crazy situation where gold is running up hundreds of dollars an ounce per day.
Yeah, it's interesting when you literally tell the world that you don't worry about monetary policy. It really makes you question what's coming for the currency, right?
Yeah, I mean they have I know that they have their marching orders from the powers that be, the elite that are present and acting in so many strange ways these days. They already have their fiat CBDC grids ready, and they're getting those prepared, and they really think they're going to lick everything and have it taken care of. But I'm not really convinced of that. I think we got a lot of chaos coming, and best laid plans don't work out. So my hunch is they have all these different tricks and traps they're going to try, but people are not going to be. There's like a third of the population that's rabidly angry right now, and they just they don't know exactly how to express it or where to point. But there's going to be a lot of problems, I think, in the coming decade, and I don't think that they have an idea as to the unknown unknowns that are coming from this.
So, James, as we covered the gold and silver markets and what you foresee coming to the end of this year here, what do you think about the chances of us having a type of deleveraging event or a real crash in equities? So
the equity market, the way I look at it now, it almost feels like it's a matter of national security to keep it nominally propped high, right? Because if you look at the baby boomers, they're all leveraged out, and they often have nothing but stocks. They're very they're very aggressive in keeping their retirements in the stock market and making all these new highs, et cetera. And they're feeling great. They're feeling really wealthy, and that's Ben Bernanke talked about that all the time about the wealth effect of keeping the stock market at high levels and everyone feeling wealthier than they probably are and spending because of that. And so my hunch is that nominally they're going to try and keep the stock market propped up. And even if you have a situation akin to 2020, don't forget, in March 2020, the stock market fell down faster than it did in 1929. And that is combination of how crazy and scary COVID was when it first came in, and also a combination of the mechanics of the financial market. When you go to sell now with a lot of these types of things that people are investing in, it doesn't matter what the price is. It just sells. It doesn't ask anything else. And so when everyone's pushing to go sell, it just goes down a wall or it goes straight up a wall. So it's a lot more volatile, let's say, than it used to be in terms of decades ago. So yeah, we could go through some volatile gyrations, but the Fed is going to intervene. They're going to come in. They're going to create more currency and keep doing that until people start losing real confidence and start pulling out. And the other thing is that the baby boomers only have 10 years, 20 years to live. And so they're going to be spending a lot of these stocks, selling them to use for living on and eating and keeping sheltered and paying for healthcare, et cetera. And so, I'm not sure. We'll see. I mean, who steps in and buys those stocks and keeps them at these astronomically high prices. But I think in terms of real terms, divided by gold or divided by physical silver, the S&P 500 and the Dow looks like a dead cat bounce still in terms of the long-term charts. I mean, obviously the nominal stock market has done incredibly well. The NASDAQ has done incredibly well the last 5 years. There's no denying that. It's in an all-time bubble. But with interest rates as low as they are, it could stay there for longer. It could go even higher for longer. So I'm not saying that it's turning around tomorrow, but next 10, 20 years, it's hard to see a situation where in real terms, the stock market doesn't roll over and you start to see a situation where gold could be, the price of the Dow at some point again, because that's happened in history. And to say it won't happen again is foolish. I think if something has happened in history, it can happen again in some way, some form, somehow.
Yeah, that reversion to the mean is something that gets pointed back to several times on this show, right?
If you have a problem with the underlying currency, that's where you start falling down an absolute cliff, and that's where you get back to a 1-to-1 Dow gold ratio. And I think people don't understand that, but if you actually have true fear, which is what this bull market is going to be on, it's not just going to be. It's going to be maybe some greed, but mostly fear. And fear is the ultimate emotion in financial markets. It's the one that makes things move quick. And so I think that's where we're going.
So, James, the last time you and I spoke, you highlighted the potential that you see for the platinum price to rise. So what factors come into play here for this to happen? And is one of the reasons because it is so overlooked by investors?
Yeah, it's first and foremost, it's just an interesting element. Like if you start doing a deep dive on what it's used for and why it's used for certain things, it's got a lot of opportunities in the coming decade or two that could be used in terms of hydrogen fuel cell cars and hydrogen fuel cell trucks. And if you just do the math on like how much is actually there above ground and the supply demand fundamentals and just the deficits that's been running and just how difficult it is in South Africa to mine platinum, given this political situation down there, you could run into a situation where platinum starts running up a wall very quickly as well, and just looks like palladium it did in the last few years. And if you look at long-term charts, it's the major four precious metals. Obviously, palladium front ran every one of them, and my hunch is that gold will be next, and you'll also see silver later, and platinum probably later than that. But platinum on a long-term scale, 5-10 years. Maybe even longer, but it's such an interesting metal in the fact that you can get it for almost 1,000 an ounce at the moment, which is pretty incredible. If you look at, it was at 2,200 in 2008. For it to run back toward that old nominal high in a currency crisis, I mean, that'll happen quickly. And then what can happen beyond that? It's hard to say, but I still think it's an interesting metal in terms of having some diversification in the precious metals. It's not obviously a monetary metal, but in a currency crisis, I don't care what it is. As long as it's precious, it'll maintain a lot of its value. And so there is a case to be made, I think, for platinum in a small percentage of your bullion portfolio, but it's still something I think you can make a case for, especially given its long-term value versus silver versus gold. Silver and platinum are the ultimate long-term value buys at the moment.
Interesting. James, is there anything else you'd like to share with us before we wrap up here?
Yeah, sure. If your listeners want to see more of my work, just go to SD Bullion YouTube channel. That's every week I put out a weekly market update on that. And I just recently did an interview with the World Platinum Investment Council, and there's probably a lot more information that those experts had to say about platinum than I. But I think that's probably best. If your listeners have interest in my work, go check out SD Bullion YouTube channel or check me out on Twitter at James Henry And.
Yeah, excellent. Thanks so much for your time today, James.
Tom, thanks for having me. Always a pleasure.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.